Hi, Paul Hefty here with 492W. Want to talk about generating revenue and financial management. Let's take a look. All right, with CPD number 7, some key points here. When we're talking about revenue, what we want to do here is figure out what is our cash cow, meaning what is your number one revenue generator, a form of revenue that is going to most consistently create the most revenue, but also at the end of the year for your business. After that, then once we identify that cash cow, then you want to try to come up with additional forms of revenue, or what we call additional profit centers. And we'll do a workshop to talk about that. Next, we'll talk a little bit about the difference between cash and accrual accounting. With that, we just want you to understand it. We're not going to use that so much in your business design. The two key points here you are going to have to use in your business plan is an income statement. That's going to be a real simple formula where you list revenue minus expenses plus the taxes, and that then equals your net income. You'll use this for your finance section of your final business plan, which is project 6 at the end of the course. For this upcoming project, project 4, which you must add, is the type of business based on tax considerations. And tax considerations meaning your federal taxes, your state taxes, and your local taxes. And we'll talk about that here at the end of the lecture. When we're looking at ideas for your discussion assignment with health law ideas, when we're talking about financial management, way to think about this is do research on what are the future changes to the Affordable Care Act or health law that will impact small businesses from a financial standpoint. So if you remember, some key points of or pieces of the Affordable Care Act back in 2015 was the health insurance exchanges that were developed and the expansion of Medicaid. And what we're talking about here is the law improved these areas so that people could get more, had more availability to insurance since it was mandated at that time. And the law expanded Medicaid opportunities. The idea here was by having the mandate to get insurance that we would increase the number of people paying premiums, which would increase then obviously the amount of dollars in the pool for insurance to take care of more people and actually lower the cost. The problem was in 2019 then, the individual mandate was repealed, not the Affordable Care Act. That's still in place. But that then, taking away that mandate, now there's less people paying premiums into the pool, and that hence has increased our premiums. You can click on the link below to the Kaiser Foundation, which will show you some data to support that. Other health law ideas, though, for you to do research, and I really encourage you to do it for this discussion, because you're going to need to address how health law and the Affordable Care Act is going to impact your business currently, but also into the future. So this is a great way to get some research done along with your discussion that you can use later. First one here is you can look at the link here where it talks about how the Affordable Care Act affects small businesses directly. And this is healthcare.gov, a great site. And then the second one is looking at specifically the SHOP program, which is your small business health option programs that hopefully a lot of you will use to provide benefits for your businesses and your employees. When we talk about cash versus accrual accounting, it's really simple. As it says, cash accounting records the revenue when the money is received and expenses when the money is paid out, where accrual records the revenue when it's earned and then when the expenses are incurred. So what happens is we're using cash accounting. We're talking about when you get the money actually in your hand. So it's a short-term, from a short-term standpoint, it's a more accurate way of knowing where your money exactly is at that moment. But accrual is considered a better form for small businesses, because over the long term, from a yearly budget standpoint, you're going to see what you are actually, your accounting is doing over the long term. So again, there's a link here where it talks about in detail some of the benefits, the definitions, but also some of the reasoning behind using accrual accounting for your business. So business finances, how to use it. You're going to have to develop a budget, and kind of the 101 to this is you're going to use it as a form of quality control. So I know we talked about that, of having your evaluation methods at the beginning of your business. You could talk about budget as one of those forms. It acts then a guide for your business, especially as it starts to turn a profit, which is typically, most businesses do not turn a profit really until years 3, 4, and 5. So for this project, when you build your business, you want to talk about what year your business is in. And I would encourage you to look at years 3 and 4 and 5 so you can talk about it generating some positive net income. We want to base this budget on 12 months, and that would be a fiscal year. Now, a fiscal year is different than a calendar year. Fiscal year starts what is the trends of that industry. So an example would be Penn State's fiscal year starts July 1 because we are finishing up the summer terms and we're really starting to generate revenue for the fall term, and that really, the fall and the spring term are the start of our calendar. So again, look at in the health industry, what is the traditional start for a fiscal year to start your budget. It's best to be conservative with sales and the revenue that you're generating. Again, we're talking the same thing. This is money you're making. This is your money you're taking in when we talk about sales and revenue. And then when you want to be a little more liberal when you're talking about your estimates for expenses, some money you're paying out. So again, by definition, a budget is a financial plan indicating expected income and expenses for a specific amount of time. We're talking about you doing this for 1 year. For the budget development, the textbook talked about several different budget types. We're going to focus on the zero-based budget. Since we don't have a real history previously, we're going to use then that zero base where we talk about specific goals for that 1 year. Use that for the course. You can see though, there's different methods. There's break-even analysis, worst case scenario, and increment, decrement, or trend line budgets also. But again, use zero-based budget for this course project. So the budget prep, there's 7 steps here. You want to gather the information. You're going to do this specifically with the next project coming up, which is a business research and report, where you're going to do benchmarking of 3 businesses. That's project 5. You want to then forecast your sales and revenue that you're going to generate, so the money you're going to actually gain and profit. And then you want to forecast your expenses. You'll project your profits and losses. You'll compare that against the industry norms. And then last, we would determine our capital needs, which for the course here we're going to talk about is taxes. And then step 7, obviously, is we want to look at our connection to health law, both the connection to it and the considerations from a legal standpoint. Again, by definition, capital is money, goods, and land or equipment used to produce other goods or services. So it's not money you actually have in hand, but it's going to help produce revenue through its services. So step 1, gathering information. Again, we're going to do specific benchmarking, and this is some great sites here for to use. You want to use for project 4 coming up, but then obviously as you build your business plan. This is a small business association. This one is specific right here to Penn State, and it's a great resource where you can actually go to it here in town and actually meet with the individuals and work on this for you with the design of your business for the class. And I've had previous students do it with a lot of success. Next one then is Small Business Association itself.gov, and it's just a great resource, and we'll show some specific ways you can use it here than the rest of the lecture. Again, you'll do project 5, which is after this human resources one you're going to be doing soon, which is a business research and analysis report. Step 2, forecasting the sales. It's our revenue. So we want to identify again that most consistent revenue generator. And again, hillbilly terms, I call that the cash cow. Once you've identified that, then you want to list different or additional profit centers, different ways to generate revenue. Be creative, again, for the course. And then number 3, break down it for 12 months. And then for your total assets. Assets here, by definition, are properties of value owned by a business or an individual. So again, I would encourage you, since you have monopoly money for the class, to actually own the facility, the building, the structure that you're going to be having your business in versus renting, and we'll show some benefits about that. Step 3, forecasting expenses. These are just examples. There are going to be 2 ways when you talk about expenses, and you want to put this in your income statement. There's fixed costs, and these are ones that are going to be consistent from month to month. These are some examples there. Second then would be you want to list variable costs, and these are ones that are going to change from month to month. And you can see here just cost of goods sold, materials, packaging, and then direct labor costs, marketing, and so forth. So financial rules of thumb. You want to double your estimates for your advertising and marketing expenses and triple your estimates for legal, insurance, and licensing fees. And we'll get into insurance here in the next few chapters. Keep track of your direct sales and customer service time as direct labor expenses. Again, customer service is everything. We've talked about that, and it actually would be part of your income statement also. So when we're projecting profits and losses, you're going to develop an income statement with your final business plan. They're going to talk about all these different budget types. When we ask about a budget of any type, we're talking specifically an income statement. And it's made up of these 3 steps. You're going to list all your forms of revenue. And again, I want you to do your number 1 revenue generator and then be creative with additional profit centers. And again, you'll do a projection for each of those months. What you want to do here is what I'm looking for when I assess this is you having a very detailed and pretty creative additional profit center ideas for your list. The numbers don't matter. You can make whatever you want with that. And I would encourage you, since it's going to be hopefully year 3, 4, and 5, you want to fudge the numbers so that your net income, you're making some money at the end. After you've listed all your revenue, then you're going to list your expenses. And again, as I mentioned, you're going to break that up into fixed and variable expenses. Again, what I'm looking for is having a very detailed list and not the numbers here. And that's just your effort and your research into your business type. Last then, you would subtract your expenses subtotal from your revenue subtotal, and then hopefully come up with a positive net income. When we're comparing industry norms, what we're doing here is we're looking at, or by benchmarking the businesses and seeing what they do well, what they do poorly, and be able to take that and use that for the design and learn from that for our business design. I would encourage you, again, to have a manager role here where you have a finance person, whether it's yourself or someone else. Step 6, determining capital needs. Basically what we're talking about here is your net worth. For the class, I want you to just focus on the taxes. So this gets into, we'll talk about you need to start to pick a specific location so that in state and both municipality, so that we can start to figure out what your federal, state, and local taxes would be. So tax considerations. This is what you're going to need to include here yet with project 4 when you talk about your business design, as you did at the beginning of project 3. You want to add now to the type of business you are based on tax considerations. You can see we're going to talk about 6 different types, but these are some links where it gives you some great actual data and information from the Small Business Association, where you have a launch your business guide. Within that, then you choose your business structure. Like I said, you need to pick a specific type of business type that we're going to talk about here. Then you want to look at your location, and then that'll determine what your taxes are. All right, so the first one is a sole proprietorship. Real simple. One person owns all the assets and the profits of a business, but then you also have the responsibility for all its liability. Again, then you can also, now you're going to report all the losses and profits on your personal income tax. The weakness here is if you are getting sued, again, you can be liable not only for assets from the business, but your personal assets. A partnership is basically the same thing as the sole proprietorship, but now obviously you're doing this with 2 or more people and sharing the ownership of the business. But again, you share not only the assets and the profits, but the liability and debts. Corporation. This is unique, as it says. We're not going to use this for the course. It's a little more complex, involving shareholders and so forth, but not applicable here for the course for a startup small business. An S corporation, again, also is not applicable for the class, but it's a way to basically, as it says here, a subchapter of an S helps the corporation avoid double taxation, where you are able to have a sole or a partnership within the corporation. And that way then it's not all taxed as income, and the losses pass through directly to the shareholders. Again, not applicable for the class. This is probably the most common, not talked in the textbook, and probably most applicable for most of your business designs, is a limited liability company. Now the benefit here is it's going to offer some limited liability like a corporation, but it's going to have the flexibility in the operations because you're going to somewhat operate like a partnership. So again, now if you get sued, the assets of the business would be liable, but your personal assets would not. So I'd encourage you, most of you, to use a limited liability company design structure. Another one is a nonprofit organization, which we talked about at the beginning. The key here, though, is we need to, if you want to be a nonprofit organization, it has to meet some certain criteria. And the key here is you must serve the public in some way, whether through offering goods, services, or a combination of the two. Again, there's some great links here where it says, it answers some questions whether nonprofit organizations do pay taxes, and can a nonprofit organization be also an LLC at the same time? It can, but it gets a little more complicated. So for the course, I would encourage you to either be a nonprofit organization by itself or a limited liability company by itself. Again, you can see other links here where it talks about connecting it directly to the internal revenue to help you define what would make up and allow you to be a nonprofit organization. Get this all the time. Can a nonprofit be a fitness facility? Well, the YMCA is probably one of the most successful, both from a financial and just from a traditional sense. So yes, you can. It does get a little trickier when we become a small business, because again, the benefit of nonprofit by serving the community in some way is you get tax exempt status. So it gets a little tricky, but again, here's a link if you're interested in seeing if a fitness center or a wellness center, small business, could qualify for a nonprofit for your business design. So last one here is an income statement workshop. You're going to need to do this in your final business plan. Remember, for project 4, you do have to talk about and identify your business type based on your tax considerations, and that's what we just talked about with, where I encourage you to look at being an LLC and or a nonprofit organization with the benefits and liability coverage. So when we do an income statement, do this workshop real quick. 1, determine the type of business you are, your business structure, a great link there. Again, you need to apply this point number 1 to the next project at the beginning. Point 2 then, this is again for your income statement you're going to have to design at the end of the class with a business plan. You want to go ahead while we've talked on this topic, the different forms of revenue, again, listing that number one revenue generator or cash cow first, and then those additional profit centers. Number three, list all your expenses and separate that by fixed and variable. And then number four, list your taxes, both federal, state, and local. Again, it's based on what type of business you are, but also where your location is. So pick your location, and then these links here will talk about how to pay your taxes. And then last, do nonprofits pay taxes?